Good afternoon. Welcome to Midcap Radar. I'm Reema Tendulkar. With me is Sonal Boothra, and these are the top stories at 1:30 p.m. this Thursday. A surprise Democrat performance in the U.S. midterms hurt the world markets even as inflation concerns loom. Auto consumer durables bear the brunt, while healthcare energy exhibit resilience.
Lupin surges in trade over 8% after sales in US market recover. Management expects the successive quarters to look much better. Says they could see an exit run rate of 17 to 18% margins in FY23.
Oberoi Realty falls in trade after the company announces an EGM to seek shareholder approval to buy one or more residential premises in 360 West project for 4,000 crore rupees from a related party. The street concerned about the quantum and timeline for the cash outgo and the funding of the acquisition.
Piramal Enterprises reports a massive loss of over 1,500 crore rupees as stressed assets weigh. Provisions rise manifold while assets under management fall by nearly 5%.
And it's a weak quarter for Deepak Nitrite. The profit falls despite a rise in revenue as margins slumped to 13.8% from 21%.
All right, those are the top headlines that we are tracking on Midcap Radar today. But of course, the biggest headline is that at 1:30, the match has started, Reema, and that is something that everyone is watching out for as well. So bleeding blue as we speak right now.
Absolutely. It's a high-stakes game,
Yes.
right? The winner is going to be taking on Pakistan on Sunday. So we're cheering for our men in blue, and let's hope that while we're away and not watching the match right
Yes.
now, we get off to a flying start. But this is clearly the big trigger that everyone's watching out for. But we've got a management waiting by to join us.
We do. NCC is the stock on our radar, posted a good set of Q2 numbers with strong order book, although higher commodity prices impacted margins. So Mr. Vijay Kumar, who's the head finance and VP at the company, is joining us now. Mr. Kumar, good afternoon. Thanks a lot for joining us. And thank you for joining us when the match is on right now. So let's talk about the numbers first up. Good operational performance, strong execution trend seen as well. How did raw material volatility impact margins now since they are coming down? What is the outlook in terms of margins? Will you be revising your revenue growth and targeted margin guidance for FY23 now?
Yeah, you see, we have got a good order execution this quarter also. We have reached a run rate of 3,000 crores now. Input volatility prices have also affected us compared to previous year. Previous year, our EBITDA levels were 10.76%. This year, this quarter, it has come down to 9.66, just 100 basis points. While actually the gross margin has also come down by 200 basis points, we are able to absorb a good amount of inflationary shock into our operations. PAT also, it has slightly come down by 0.6% compared to this. And going forward, what we see is the inflation. Since end of the last quarter, the prices have been stabilizing. I think more or less the margin should be retained. But however, the global uncertainties are there. There is a lockdown in China, and there is energy shocks that's all happening in Europe. So these things are a bit of concern. But however, I think we are confident that we should be able to manage it. Just as a matter of side note, I would like to mention my board has not given a specific guidance on profitability or any top line. But this is safely, personally, if you ask me, this is what safely we can assume.
Mr. Kumar, afternoon. Your order wins in Q2 were about 2,330 crore. Is that the run rate we should expect going ahead, or do you think things are picking up further?
Yeah, I think that's a good number to assume, and we have posted something like 30% compared to last year's order book position. So we should be able to continue the same trend this year also.
What is the current debt, Mr. Kumar, right now in your books? And going ahead, since the order book is looking so strong, will you be taking more debt? And by the end of the year, what will peak debt look like?
You see, there is no way we have any plans to increase our debt. Even this quarter, and if you see, it has come down to 1,985 crores compared to the quarter last year. It is lower by 2,020 crores. So I think we will be maintaining the same debt levels. We have no plans of increasing it. In fact, our working capital levels are also coming down. Possibly there will be a decline in the debt levels also.
What's the current debt number?
I couldn't hear you properly, please.
Could you tell us what is the current long-term debt and the working capital?
Long-term debt, we don't have much of a big number in our books. It's like 150, 170 crores. That will eventually come down. But the overall working capital debt is something like 1,800 crores, which is adding to the balance sheet. But however, this number is still lower compared to the previous, compared to the quarter in the previous year.
Okay. Give us a sense, Mr. Kumar, in terms of your dues from AP government for the past project. How much is due, how much has been paid, and what is the status on sale of Vizag land? What is happening here?
Yeah, I'll answer the first question. The AP position is more or less it's the same as last quarter. There were outstanding receivables of 500 crores in the books. So I think that that is remaining, but we are getting a small amounts of payments here and there. That would take a little more time to exhaust the entire receivables position from AP. And as far as the Vizag land sale is concerned, we are as per the terms of agreement, we are supposed to get 200 crores each quarter-wise, which is a payback of entire equity, and the balance debt of 320 crores, which needs to happen over next 2 years by March 2024. We have already received 50 crores last quarter. This quarter, this September quarter, we were supposed to receive 50 crores, which they have short time up to December. I think we should be able to receive by December and another 50 crores.
All right. Okay, Mr. Kumar, thanks a lot for joining us and giving us all those details and the outlook for business as well. That's the word coming in from NCC. Good set of numbers, but the stock absolutely flat as we speak. We'll do one thing. We'll slip into a short break now. We'll get you more on markets and stock-specific action. Stay tuned. Welcome back. You're still tuned into Midcap Radar on CNBC-TV18. Well, Kaynes Technology IPO has opened today. Issue size is 858 crore rupees, which is a split of offer for sale and fresh issue of 530 crore rupees as well. Mr. Ramesh Kunnikanan, who's the managing director, and Mr. Jairam Parvastu Sampath, who's the CFO at the company, is joining us now to discuss the outlook and the idea about the business as well. Gentlemen, good afternoon. Thanks a lot for joining us today on CNBC-TV18. Mr. Ramesh, let me come across to you first. You have a couple of reasons why you're raising funds this time around. This one is for setting up of subsidiary. Some of it will be used for certain borrowing payment. There will be something used for working capital requirement as well. And 99 crore of capex will be used for existing manufacturing facilities. First, on the borrowings, will you be able to get to that net debt zero level after this particular fundraise? And what is the outlook on the capex? You are incurring around 100 crore rupees. Is it for capacity expansion?
No, we will keep the debt level at around 50 crores. The whole idea is we wanted to leverage with the bankers because going forward, the business is going to multiply. Today, it is India's turn to get into manufacturing. We have large order pending. We have around 2,250 crores of order pending, and we also have a lot of new products in pipeline. So I will not be able to make the net debt to zero. Second is 100 crores we will be using for both the factories to upgrade it to the next level of world-class manufacturing. We are also coming out with a new factory near Chamarajnagar for 130 crores.
Okay. Okay. Sir, almost 40% of this IPO money will be via an offer for sale. Could you tell us the reason, Mr. Sampath, for that? Why is it that the promoters as well as the investors, some of them are looking to reduce their holding?
It's a requirement to come to a particular level of dilution for the promoter. So instead of waiting for 3 years to do that, we thought we'll comply it in the year one. As far as the investor is concerned, only half of their holding they are redeeming with this IPO. The remaining, they stay invested.
But Mr. Sampath, the requirement is to come down to 75% stake. With the offer for sale and, the fresh issue, your promoter holding will come down to much lower level, 63%.
Yeah, little lower. So the idea also is that all the proceeds have been invested by the promoter into the company for last 34 odd years. So just a little bit wealth creation for the promoter too.
Okay. All right. In that case, let's talk about business as well now. You have around 50% exposure to European markets as a part of your total exports. Wanted to understand how is all that is happening in the global markets or in Europe in particular impacting business, and what portion of your raw materials are important? Mr. Ramesh, that is for you.
See, our export inquiries are increasing because we are having all marquee names as our customers, and whatever they make for the India market, we also export it. So it becomes natural. As far as the hedging is concerned, we are almost 70% naturally hedged, 30% hedging we are doing. When it comes to raw material, 70% of our sales is raw material, and in that we have around 40% as our imported material. So this is the situation.
And you are completely hedged against the fluctuations that we've been seeing in currency this time?
Yes.
Okay.
Just to understand the business a little bit more, you've got a revenue contribution coming in from various industries. The highest is automotive at 34%, then industrial at 30%, railways is 10%, medical is 10%, consumer is 8%, IoT, IT and others constitutes about 5%, while aerospace, defense, nuclear is about 3%, just for the benefit of our viewers. Could you tell us which of these segments is seeing the maximum traction, base effect apart? Where is it that you're most optimistic about? And can this mix change going ahead? And how will it change?
The next 3 years, we have a crystal clear clarity. It goes up by 1-2%. Otherwise, the series will be automobile, then industrial, thereafter railway, and then comes aerospace and defense. We are also trying to put a team together to find out how we can increase the medical business. As of now, it is a little low for us.
You're trying to figure a deal? Are you looking at some sort of a strategic partnership, a tie-up, an acquisition?
We are trying out with various options. We have not yet crystallized as far as medical electronics is concerned.
So how much does medical electronics constitute? What is the opportunity there that you're trying to tap into? And how much would you like it to contribute?
For that, we have to look at global market. If we look at global market, we can easily take it up to around 8 to 10%.
And currently, how much does it contribute, medical electronics?
For us, as of today, it's around 1%.
So you want to raise it from 1% to about 8 to 10%
yes.
Based on the opportunity?
Idea is to bring the automobile to around 30%, industrial to around 30%. Railways, we wanted to take it by 2%, like that. So railways will be up by, instead of 10, it will become 12%. And then medical, we wanted to take to 8 to 10%.
Okay. Mr. Sampath, some of the proceeds will also be used for repayment, prepayment of certain borrowings. Could you give us an indication of your long-term plans on the borrowing front?
Yeah. So currently about 180 crores of borrowing is there, out of which 130 crores will be paying off. So we'll retain about 50 odd crores of borrowing. Going forward too, the current level of money that has been poured in is sufficient for FY23 and probably part of FY24. We'll also be generating cash, but we'll also have to worry about or plan for further capexes as the existing capacity that is being built gets kind of consumed. And so going forward, we might leverage the balance sheet a little bit, but not to the extent that we are today. And so maybe from FY25 onwards, we may have a situation in which the sales numbers may deserve some borrowing too. As you know, currently our order book is at about 2,200 crores, which is like 3 times the size of last year. This has to be delivered in about 1.5 years' time. And as you know, this order book is growing month-on-month basis. So obviously we have to keep ourselves ready for taking some debt to fund working capital. CapEx, of course, we from our internal resources, we can fund CapEx in terms of at least the margin money for that. And again, some term loans, etc. So right now, 250 crore will go into CapEx. Maybe FY 25-26 timeframe, we will reconsider this depending on the orders that have come in. And we may have to add some more CapEx after some 3 years.
So FY 25-26, you could consider leveraging your balance sheet in order to increase the capex, right?
Yes.
Okay. What, according to you, a lot of our viewers are listening to you for the first time, Mr. Ramesh, and they want to understand more about the company. If you had to tell us what would be the biggest opportunity for you right now, what could go in favor of the company, and the biggest risk as you see it right now, what would it be?
As far as the opportunity is concerned, today, whatever we have gained with the market, we are able to get too many RFQs and we are able to attract more customers. The risk what I see is today we should not have any war between China and Taiwan. Any such things only can take this company into a different route. Not only this, I feel today another 10 companies in the electronics manufacturing space.
So sorry to interrupt. If suppose things get sour between China and Taiwan, could you tell us how will you get impacted? What percentage of your components get imported?
Even if it is lasting only for 1 month, 2 months, there is no problem. But long term will have an impact because most of our processors are made in Taiwan. Some are reprocessed in China. So it will affect our business in a big way.
Okay. All right, gentlemen. Thanks a lot for joining us and taking us through what your business looks like, what these proceeds will be used for, and explaining to us what the process flow is like. Thanks a lot for joining us. That's the new kid on the block, which will be listed by the end of this month. For now, we'll slip into a short break now and put focus on a host of companies which are reacting post. Welcome back. You're still tuned into Midcap Radar on CNBC-TV18. A lot of earnings, fag and end of the earnings season, but a lot of them are reacting as well to earnings that they reported post-market hours yesterday or during the day today. This is the Midcap Spotlight segment. Vaishta will focus on all those stocks today. Vaishta.
Hi Sonal, thanks for that. Well, you're right. Actually, all the stocks that I'm going to be talking about have been in the red today. The first is Gujarat Alkalis. Very weak set of numbers coming in. Revenues though were stable, but operating margins have come in at 20% versus 33.7%. So a dip on that. The next is Team Lease. The total headcount addition is at 20% year on year, which is a growth though is the lowest in the past 5 quarters. The EBITDA margins have also dipped to 1.62% versus 2.24%. And the last one is ITD Cementation. Weak margins have impacted Q2 of FY23 performance. The margins have come in at 5.8% versus 6.2%. The order book is low at 21,700 crores, but this includes an order win of 7,100 crores in the first half of FY23. So some weak numbers for all the 3 stocks.
Okay, thank you very much for that. Just to talk a little bit more about Team Lease, which is a staffing company. The stock price has collapsed 15%. As Vahishta was pointing out, revenue growth at 28.5% this year compares with an over 30% growth that we've seen in the last 4 quarters. And generalized headcount addition has seen a bit of a slowdown. And in specialized staffing, IT has come down. The company indicated that IT staffing headcount is down 9% on a quarter-on-quarter basis. The IT staffing revenue has fallen 3% on a quarter-on-quarter basis and is just up close to about 5%. Remember, IT hiring has been a big driver for companies even like InfoEdge's Naukri business, and IT hiring has slowed down. It's a much smaller percentage of the contribution for a company like Team Lease, but the fact that we've seen a seminal decline in the IT hiring, that is telling. IT staffing headcount down 9% for Team Lease on a quarter-on-quarter basis. So a big knock seen on Team Lease right now. Here's what we'll do. Let's get to LT Foods, because this is a CNBC-TV18 news break which is confirmed. LT Foods has issued shares up to 390 crore rupees to Salik International Investment. Vivek is here with the details.
Well, that's right. So LT Foods is in focus. On October 27th, we had indicated that the company was looking at fundraising plans. We had indicated that certain Middle East, PE funds were looking at it. And along expected lines, Saudi Arabia and livestock investment, this is SALIC investment, is the company that is now looking to invest money in the company. Now, the route that they're using is the preferential allotment route, and the company would be issuing 2.7 crore shares, and the rate is at a significant premium to the current market price. 142.23 rupees a share is the rate at which the investment will come in. Along with it, the promoters also would be selling close to 1.33% stake. So at the end of it, they would end up owning slightly over 9.5% stake in the company at the end of this fundraising activity. Along with that, they've also gone ahead and signed a supply arrangement with SALIC, and this is for a period of almost 10 years. So some positive news flow coming in as far as LT Foods is concerned. The long-awaited fundraise is something that has been finalized in today's board meeting.
Thank you very much for that. With that, we're out of time on Midcap Radar. From the entire team, thank you for watching Mutual Fund Corner when we return.